Mindtree will be on our radar as it will be reacting to its Q3 earnings today. Rima joins us with the highlights of the results. Rima, it was an inline set of numbers?
Absolutely, Sonal. Good morning. So the dollar revenue growth came in at 2.1% on a quarter-on-quarter basis. On a constant currency basis, growth was at 2.4%, bang in line with the CNBC TV 18 expectations. And if you look at the growth on a year-on-year basis, it's actually closer to the industry, the high point of the industry growth rate at 17.8%. Margins expanded by 50 basis points to 37%. On account of a Forex loss, profits have come down on a quarter-on-quarter basis. This time, the growth was driven by pricing because volumes actually declined for the company by 1.1% on a sequential basis. If you look at the company guidance in the management conference call, it was actually quite healthy. They said that Q4 growth rate will be better than Q3, but Q4 margins will be similar to Q3 because everything that they extract out of efficiency or currency will be invested back into the company in order to achieve the growth rate. The two concerns this time around. One, the top client, which has been driving growth for the company, has slowed down. So growth for the top client this time was at 1.1% sequentially, which is lower than the company average. And secondly, for another quarter, the total contract value of deal wins or the fresh order wins have slowed down. If you look at the brokerage reactions, Credit Suisse, which is a target price of 925, they brought it down. They say multiples are unlikely to go back to what they were earlier. Morgan Stanley is an underperformed rating, but they say that Q3 was better than expectations and the outlook for Q4 is better. Macquarie has actually upgraded the stock to a neutral with a target price of 910. But net that Q3 in line, outlook for Q4 slightly better.
All right. Thanks so much for that, Rima. Well, moving on then, late last evening, CNBC TV 18's Newsbreak was confirmed. Now, in a breather for startups and their investors, the government has issued a notification making it easy for startups to seek tax exemption on angel fund investments. Ritupurna Boyan joins us with all those details.
We have done away with the condition of having a merchant banker specifying the fair market value, and instead two specific conditions have been put: one for the startups, secondly for the investor. For startups, if they want to apply for exemption, then the aggregate amount of paid-up share capital that will not be able to exceed 10 crore rupees. That's condition number one. As far as investor is concerned, 50 lakh crore minimum returned income in the preceding year of investment and a net worth exceeding 2 crore. And as we have been saying, the interministerial panel has been done away with. DIPP will be taking the applications and will be then forwarding it to CBDT. Now, sources from DIPP have just told us that this will also cover startups before 2015 as well. And as we have been reporting, sources have confirmed that, and this is also mentioned in the notification, doing away with the interministerial panel because the interministerial panel was not being able to resolve many issues, and hence now that has been done away with. CBDT has been brought in. Within 45 days, CBDT will say if a startup is eligible for Section 56 exemption or not. With that respect.
Of course, that is some support coming up from startups. Thanks a lot, Ritu, for that.